Welcome everyone to another session on economics at Mission Yeshas. So today we'll be continuing with national income accounting. We have covered up till NFIA in the previous session. So and hope you're revising as the classes are going on. So let's continue with the national income accounting. Now market price and factor cost. So remember market price will increase when the taxes imposed by the government increases. So I'm talking about indirect taxes. So when I'm talking about market prices will have the impact of taxes on it, indirect taxes, IDT. And if the government is giving subsidy, then it will decrease the market price for the consumers. So we measure national income at market price. It means what is the market price of final goods and services. So market price is what the consumers are paying, and consumers are paying taxes, but the consumers are not paying subsidies. Subsidies. So market prices will increase by the amount of taxes and will decrease by the amount of subsidies. But whereas factor cost is just the opposite. When I talk about factor cost, then it will exclude the impact of taxes, but it will include the effect of subsidies. Just remember, easy way to remember market price. What we pay, we add. What we don't pay, we deduct. We pay taxes, we add. We don't pay subsidy, we deduct. So if we want to calculate GDP at market price from the GDP at factor cost, then we will have to add to the factor cost what we call it as net IDT. Net IDT, net indirect taxes, is when we make the adjustment between indirect taxes and subsidies. So since we are calculating market price, so GDP at factor cost will be add indirect taxes. This net IDT will add indirect taxes and we will deduct subsidies from it. And if we are calculating factor cost, is just the opposite. It means we'll do minus net indirect taxes. That will make the difference between market price and factor cost. So you see here market price and factor cost. So NNP at market price, where is it? Just hold on. Yes. Market price is factor cost plus net indirect taxes, that is IDT minus subsidies. Whereas factor cost, if we are calculating, then from the market price, we'll have to deduct net indirect taxes, that is market price minus net indirect taxes plus subsidies. Clear? So it means if government is giving 50 rupees of tax, charging 50 rupees, you see the cost of the unit is 50 rupees, amount of tax is 15, it means 50 plus 15, that it will be 65, and then government gives a subsidy of 10, that is minus 10, so it will be 55 rupees will be the in the hand of the consumer, the product will be. Clear? Now there are two types of taxes, product taxes and taxes on production. Remember, on and off they ask one question from here. Product taxes are ad valorem, it means is done on value addition. It means if the price of the commodity increases, then the tax impact will also increase. For example, if I'm selling this pen at 1000 rupees, government says 10% tax, so I'll have to charge 100 rupees from the consumer. It means from the consumer I charge 1100 rupees. But if suppose I want to sell this pen at 2000 rupees, then I'll have to collect 10% of 2000, that is 200 rupees from the consumer. So it means the price of the product will be 2200 in the hands of the consumer. So it means when the value of the goods increases, the tax liability will also increase even when the percentage remains same. Ad valorem, GST is ad valorem. Whereas when we talk about taxes on production, it is imposed not on the product but on the activity of production. So it will not increase or decrease due to increase or decrease in the value of the goods sold. Property tax, pollution tax, permit charges, license fee, alright, these are all taxes on production. Now when we come to about difference between the gross and net, the difference between gross and net is always depreciation. So just like what is the difference between gross profit and net profit? From the gross profit we deduct indirect cost and deduct depreciation, that will give you net profit. But here in the in national income, we don't differentiate between direct and indirect cost. There is only difference between capital and current. So from the gross, if we deduct depreciation, what we get is net. So net domestic product will be gross domestic product minus depreciation. Net domestic product is NNP at market price and minus net factor income from abroad. If you see, the difference is domestic and national. So remember the golden rule that I have told you. Those who don't know the golden rule, please go to marathon, revise the video. I've explained you how to remember the equation from there. Okay, let's come back. So you see here, gross domestic product at factor cost will be GDP at market price minus net indirect taxes minus subsidies. Now the thing is, this is nothing but value addition. And how do we add value? We will spend money on goods which are intermediate goods. We'll have to pay wages, we have to pay salary, we have to pay rent and everything. So when we have to broadly include all the intermediate consumption that we used for value addition, that will come down to compensation of employees plus operating surplus, that is rent, interest plus profit, easy way to remember, RIP, rest in peace, plus mixed income of self-employed. All right. And since you are calculating gross, you have to add depreciation. If we are calculating net, then you don't have to add depreciation. Now let's say, for example, if let's say we are calculating here not gross domestic product but gross national product. If I cut this down and write this here, rather than GDP, we are calculating GNP at factor cost. So what is the difference between domestic and national? That is NFIA. We are calculating GNP. So everything remains the same. Compensation of employees, operating surplus, mixed income of self-employed, plus depreciation, सब कुछ same रहेगा. But additionally, we will add NFIA. NFIA. When I do that, it changes GDP at market factor cost changes to GNP at factor cost. Got it? Clear? Now here, per capita income is nothing but national income divided by the total population. National income is measured by as NNP at factor cost. So when we divide NNP at factor cost by total population, what you will get is per capita national income. If you want to get per capita GDP, then you have to divide the GDP from the total population. Now, frequently they ask the question, the difference between personal income and private income and national income. So first of all, remember, when we talk about national income, personal income will always be greater than national income because personal income will include the concept of transfer income. Say, for example, when your parent gives you pocket money, can you say it is your income? The answer is no. It is your personal income, but it is not your national income. Because when they earned this money, it was already added to the national income. Now, simply they are transferring this money to you. So, this is not, it is your income, but it is not a part of the national income. If I add this as a part of national income, it will lead to double counting. That is the biggest problem with associated with measurement of national income in developing and least developed countries. So, when we talk about national income focuses on the concept of what is earned. Whether you have received or not, it will be added to national income. Income earned and received, salary, I have worked, I have received, that will be added to the national income. Income earned but not yet received, my contribution to the PPF, I have earned but I have not yet received, I will withdraw it later on, so that will be again added to the national income. What it will not include is income received but not earned. So what is the difference between receipt? So in the case of personal income, our focus will be on the receipt, whether earned or not. So any income that you receive, it doesn't matter how you have received it, it is your personal income, whether you have earned it or not. So when I say personal income, I will include every income received, whether it is earned or not. Whether it is earned or not. So it means those income, and it will not include what? Not include income earned but not yet received. So income which is earned but I have not yet received it. When I receive, I'll add it to the personal income, but I have not yet received, I'll not add it. So the focus on personal income is received. Whenever you receive, you'll add it. Whether you have earned or not, that does not matter. In case of national income, earning is it matters. Whether you have received or not, it does not. It means in the national income, we will add every income that is earned, salary earned, received. Workman compensation earned but not received, added. All right. Charity and donation received but not earned, it will not be added. Personal income, it will be added. All right. Dividend, unclaimed dividend. I mean, you see this dividend, undistributed dividend. You will receive it later on. Have you earned it? Yes, added to national income. All right. You have not earned. You have earned it. Yes, but have you received it? No. But since you have earned it, it will be added to the national income. But have you received it? No. So it will be not added to the personal income. So national income, I'll again say it is the income earned and received, whether earned and received and earned but not yet received. Both we will be added. Personal income, income received but not earned, and income received and earned. Both will be added. But income earned but not yet received will not be added to the personal income, and income received but not earned will be not added to the national income. So finally, we can say national income, it will include income earned and received. It will include income earned but not yet received. तो ये ऐड होगा. And what it will not include, माइनस होगा ये. Income received but not earned. Donation, charity and everything. When we talk about personal income, we will add what? Income earned and received. We will add income received but not earned. What I will not include, what I will not include is or exclude income earned but not received. Clear hai? All right. So that distinguishes, makes the distinction between personal income and national income. Disposable income, from the income, you deduct income tax. What is left is your personal disposable income. Now, private income. So remember, they also distinguish between private income. Within the national income, you have government's income and plus income of the private sector, which includes the household also. So it means if I want to find out what is the income, private income and personal income, then from the national income, I have to subtract this government income. What is left is the income of the private sector. So from the national income, I have to deduct what? First, government's income. Correct? I have deducted government income. But national income, private and personal income include income received and not earned, transfer income. So I will add transfer income. Now this transfer income will also include interest on national debt. That is, when the government borrows, how do you think the government borrow? Government will issue the bonds to public, government will borrow the money. And when the redemption of the bond comes, what the government do? Government will issue new bond to the public again. From the public, it takes money and gives the money back to the public. It means it is nothing but money being transferred from between public and public. All right. So this must be added to the national income basis. This is transfer income. So when we do that, what we get is the income of the private sector. But so income of private sector. But all this income goes to the household? No. Two things must be deducted. First, corporate income tax. Corporate income taxes on the net profit have to be deducted. This doesn't go to the household. And Retained earning, retained earnings, the earning that the company keeps with itself, it doesn't go to the household. Remaining will be distributed as dividend to the household. That will give you personal income. And from the personal income, if I deduct personal income tax, what you get is personal disposable income. Clear or not? So it means from the national income, you deduct government's income, add transfer income, add interest on national debt, that gives you income of the private sector. From that, you deduct first corporate income tax, you deduct retained earning, remaining is distributed as dividend to the shareholders, that is the household. So that will become the personal income. From that personal income, you have to deduct personal income tax to get the personal disposable income. I hope this is clear. Now let's take a look at some of the questions. From the following data, calculate NNP at factor cost, NNP at market price, GNP at market price, and GDP at market price. So let's quickly, if I write here, it will take a lot of time. So I have shared in your class the handouts, wherein it covers all the numericals. Now let's take a look at those handout, and those who have not got these handouts, it will be included in the description. So let's take a look here. So they've given, first of all, what they've given here, they've given operating surplus, mixed income of self-employed. Now remember, to confuse you, what they've given here, rent and profit already given here, and they've given operating surplus. So remember, this 2000 includes this 550 and 800. So you cannot take this, otherwise will lead to double counting. Right? So we'll apply the formula, that is compensation to employees plus operating surplus, correct, plus mixed income of self-employed, right? So you see exactly the same thing is done here. Compensation to employees, operating surplus 2000 added, mixed income of self-employed is added, depreciation, consumption of fixed capital is added, and net indirect taxes, what you get is GDP at market price. This is your GDP at market price. Now from the GDP at market price, if you want to get from the GDP at market price, you have to calculate, what is it? NNP at factor cost. But when you calculate NNP at factor cost, all these things can easily be calculated. So from the GDP at market price, we want to calculate GDP at factor cost. Then what you have to do? Factor cost calculating कर रहा है, तो I have to deduct net indirect taxes, 450 minus कर देगा. From the GDP at factor cost, if I want to get GNP at factor cost, it means I have to add NFIA, negative है, so I will have to deduct this. Now we have got GNP at market factor cost. Now from the GNP at factor cost, I have to get NNP at factor cost. What is the difference between gross and net? That is depreciation, applying the golden rule here. So I have to, what? NNP, you have to deduct depreciation, that is consumption of fixed capital 400. You will get your answer as it's done over here. You can see here market price में NFIA ऐड किया, so it will become gross national product. Then depreciation ऐड किया, it will become net national product, gross से net हो गया. And then deduct net indirect taxes, market price becomes factor cost 4050 would be your answer. Clear है? Now let's see question 6, what they've asked in question 6. From the given data, estimate national income and personal income. So remember, first we'll calculate private income. Once you calculate private income, from there you easily get personal income. Before you get personal income, first you will arrive at private income. So it means we have to calculate first the national income, that is NNP at factor cost. What they've given here, net national product at market price. This is your NNP at market price. How do we get NNP at factor cost? That is deduct net indirect taxes. So you see indirect taxes and subsidies are given. So it means if from 1891 factor cost, It means I will deduct 175, I will add 30. What you will get is NNP at factor cost. Now, what you get is NNP. Let's see how much value we have got here. So, you see, NNP at factor cost 1746. Now, what you have to do here, from here you deduct government expenditure. So you have to deduct income from property, entrepreneurship accruing from the government. This must be deducted. Saving of non-departmental enterprise, again a government enterprise. This must be deducted. Interest on national debt. This must be added. Current transfer from the government, donation added. Current transfer from the rest of the world, again it will be added. So that will give you the income of the private sector. Now, savings of the corporate sector, that is your retained earning, it must be deducted. Corporate profit after tax, it means net on taxes on the net profit, this must be deducted. When you do this, what you will get is your private personal income. So let's see here, exactly the same thing is done. So NNP at factor cost, government income from property and ownership 45 minus savings of non-department minus 10, transfer income, so 15, 35 and 20 will be added. So 1761 is you get, what you get is your private income. Personal income is private income minus corporate income tax minus undistributed profit, you will get personal income. If they would have given you personal income tax, then you deduct, what you will get is the personal disposable income. Let's look at question number 7. Okay. Calculate aggregate value of depreciation when GDP at market price in the country is given 1100 crore and net income. Okay. So simply what they've given here is GDP at market price is equals to 1100 crore. NFIA they've given as 100 crore. Net indirect taxes, net IDT they've given as 150 crore. That's it. And national income, NNP at factor cost they've given as 850. Now tell me, what is the difference between NNP at factor cost and GNP at factor cost? The difference, factor cost same, national is same. Difference is what? Net and gross. And so can I say the difference between NNP at factor cost, GNP at factor cost is due to depreciation? It means whatever the difference between them, that will be the value of depreciation. So NNP at factor cost is already given. So if we calculate GNP at factor cost, can we not get the value of depreciation? The answer is yes. So to calculate GNP at factor cost, what we have to do? First, from GDP at market price, I have to deduct net indirect taxes. You'll get GDP at factor cost. From that GDP at factor cost, you have to add 100. You'll get GNP at factor cost. Correct? So you have got GNP at factor cost, means 1100. You have to deduct 150 and add 100. So it means you have to deduct. So it will be 1050. So 1050 will be your GNP at factor cost. So 1050 and 850 का difference कितना है? 200. So let's see here. You get a depreciation value as 200 and I've solved it here. You see, since NNP at fact is given, we need to find out GNP at fact because difference between them is NFIA, and this is how it is solved over here. Now let's look at some other questions. Now remember here the national income, who calculates it? Ministry of Finance uses GDP numbers at current prices to determine the fiscal target, and Ministry of Statistics and Program Implementation has released new series of national account revising base year from 2004 and 5 to 2011 and 12. Now, methods of measuring national income. Under methods of measuring national income, three methods we have already discussed: primary sector, value added method, expenditure method, income method. Under value added method, what we do, we divide the entire sector into entire country into primary, secondary and tertiary sector, and value addition done in each sector are added together. In case of income method, what we do, income earned by different economic units in the country will be added up together. Income earned by through salary, income earned through rent, income earned from interest, income earned from sharing of profit, everything, every income will be added. Under expenditure method, we will count the expenditure of everybody. It means it has four components. First, we say private final consumption expenditure, wherein we'll take the number of units of final goods sold to the final consumer multiplied by market prices. It means 1000 AC sold, each AC is costing around 50,000 rupees. So 1000 into 50,000 will be consumption expenditure, consumption of final consumption of goods. Likewise, government also consume, but it's very difficult to determine the price of or the value of government services. So what we do, we add up the entire government expenditure on infrastructure, on defense, on healthcare and subsidies and everything, and we'll add it together. Then gross domestic capital formation, it means expenditure incurred on assets, jewelry, machinery, tools, equipments, locomotives are added up together as consumption of fixed capital, gross domestic capital formation bolte hain. And finally, we will add export and deduct import. When we do that, these four components will get national income from expenditure method. So private final consumption expenditure, plus government final consumption expenditure, plus gross domestic capital formation, plus exports and minus import. So you see here. Now here they've given through value added method, value of output minus intermediate consumption, that is nothing but sales plus change in stock minus intermediate consumption. Because you remember here, when let's say this is your closing stock sum value, this is your opening stock sum value, this is your sales sum value. So here what is left? Sales plus closing stock minus opening stock. Don't you think what you get here is value addition? But this is not entirely value addition. Here there will be intermediate consumption, that is nothing but purchase. So sales plus change in stock, that is sales plus closing stock minus opening stock minus intermediate consumption, what you get is the gross profit or gross value added. So sales plus closing stock minus opening stock minus intermediate consumption, that is purchase, what you get is the value added. So national income through value added method is determined in this way. Now income method we all have known, compensation to employees, operating surplus, mixed income, self-employed. Because we are calculating net national product, we add NFIA. Expenditure method I have already explained it to you. You see, private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, net export, it means we add export and deduct import. Now let's look at problem number 9 here. Calculate national income by value added method with the following: sales, opening stock, intermediate consumption, closing. So it means, can we get the gross value added, that is sales plus closing stock minus opening stock minus intermediate consumption? Yes, and from there the adjustment can be made. So you see exactly the same thing is done over here. So sales plus change in stock, that is plus closing stock minus opening stock minus intermediate consumption, what you get is GVA at market price, that is nothing but GDP at market price. And from that, if you deduct indirect taxes, you will get GVA at factor cost. Market price से indirect taxes deduct किया, factor cost आ गया. You call it GVA or you call it GDP, it means the same thing. Then from there, if I deduct depreciation, then gross will become net, and add NFIA, then domestic will become national. So it means that will give you national income of 70. Question number 10, let's see. Under question number 10, calculate operating surplus. They've given sales, compensation employee, intermediate consumption, rent, interest, consumption of fixed capital. So very easy. All right. So it means you have to calculate GDP at market price, and easily you can get this. So you see, value of output minus intermediate consumption, sales plus closing stock minus opening stock. So it is not given. So we'll only deduct minus intermediate consumption. What you get is GVA at market price. That is nothing but GDP at market price. Now from that we got GDP at factor cost. That is, we deduct net indirect taxes, and then we deduct depreciation. What we get at NDP at factor cost. Now NDP at factor cost is what? NDP as factor cost is again compensation to employees plus operating surplus plus mixed income of self-employed. And since we are calculating national income, we are only calculating NDP. We will not do anything with regard to depreciation. So it means we have got this 2700, that is NDP at factor cost, compensation employees plus operating surplus plus mixed income. So operating surplus we have to find out. So X we have kept it as X, and you get the value as 1500. Now illustration 11. Calculate national income by value added method. So you see what I've told you, under value added method will do value addition in each of the sector. So value added kitna hai? Value added is equals to total value of output minus intermediate consumption. So value of output in the primary sector minus intermediate consumption in the primary sector. So 1800 over here. Value of output in the secondary sector minus intermediate consumption in the secondary sector, that will be 2800 minus 800, that is 2000 here. Then value of output in the tertiary sector minus intermediate consumption in the tertiary sector, then you will get 1000 here. Once you get this value, then you have to calculate NNP at factor cost. Mind it. So what you've got here is GDP at market price. From there, you have to get NNP at factor cost. So it means what you have to do first, net factor cost ke liye, you have to deduct net indirect taxes. From this value, you will deduct 300. Then to get net from the gross, you have to deduct depreciation. It means you have to deduct minus 470 here. And then you have to add NFIA. So you have to add a negative of, because it's negative given value, it means foreign entities and individuals earn more in India compared to Indian entities and individuals abroad. So minus 30. So basically you're doing what? Minus 30 minus 300 minus 470 to this value you got here, you get your national income. You see it's solved over here. That is value of output in the primary sector. This I've already explained. GDP at market price. Here it is shown that GDP at factor cost, GDP at minus net indirect taxes, factor cost aa gaya, then NDP at factor cost aa gaya, and then NNP at factor cost. That is your final answer. All right. So all the other problems, I'll share the handout. You can look at it, and if you have any other query, you can watch the marathon session. I hope this helps. So please keep revising and keep solving the MCQs. And please do comment in the comment section, national income. Don't go away. Account session will start very soon. Bye-bye. And Yashashi Bhava.
Welcome you all to Mission Yeshas Bills of Exchange chapter continuing in accounts. In yesterday's class, in yesterday's session, in yesterday's video, we saw bills of exchange, various situations of bills of exchange, accounting for bills when it was held till the maturity date, honored, dishonored, renewal of a bill of exchange, retirement of a bill of exchange, discounting of a bill, bill sent for collection, endorsement of a bill of exchange, insolvency of the drawee, multiple situations we have discussed in yesterday's class. Let us come down to today's point of discussion, which is relating to accommodation bill. What do you mean by accommodation bill? Let us understand in the form of a story. I've taken two parties today. We don't have A and B on the screen. The two parties that we have today are teacher and student, Dhanush sir and you. You're all able to understand Dhanush sir's class. Very good. Liking Dhanush sir's teaching. Awesome. You're all Dhanush sir's friend. I'm your friend too. We're all friends. And I'm asking you to sign on a piece of paper. Dear friend, please sign on a piece of paper. In the piece of paper on the right side, I've written, student will pay 1 lakh to Dhanush after 3 months. And trust me, you're my friend. I'm not going to ask you to pay me 1 lakh. I just want your signature on that piece of paper. I just want your signature on the piece of paper. I'm not going to ask you to pay me 1 lakh. Come on, you're my friend. You can sign for me. I'm sure few of you are going to agree to sign for me. Those of you who agree to sign for me, you'll pass in the exam. Very good. I'm not commenting for those who didn't agree. You people told me you're friend and you didn't agree to sign on that paper. Okay. Coming to those who agreed to sign. You agreed to sign on this piece of paper. I've got your signature. What can I do with this paper? On the maturity date, trust me, I don't have any intention to take money from you. I'm not going to, blackmail you. Have your sign, give me money. No. What can I do with this piece of paper? Now what happens is, with this piece of paper, I go to the banker. What was the value of the bill? The value of the bill was 1 lakh. I go to the banker, I get the bill discounted. For easy calculation, I'm assuming the discount is 10,000. What would be the amount received from the banker? Amount received from the banker would be 90,000. Now, what happens in this case? Dhanush sir got a loan from the bank of 90,000 without having any security. Agree, yes or no? Normally, if I go to the bank and I want a loan, the banker is first going to ask me to give some kind of security. I don't have any kind of security. Then in this case, what I can do? I can ask my friend to sign a bill of exchange. I can take that bill of exchange, give it to the banker. Banker will give me money today. I got 90,000 loan on the maturity date. Who should pay money to whom? My friend should pay money to the banker. No, I'm not going to put you in trouble. I'll give you 1 lakh rupees. You go and pay money to the banker. This is the situation where bills of exchange are being drawn without any exchange of goods. In all the examples that we saw yesterday, A draws a bill of exchange, B accepts the bill of exchange. Why A drew a bill? A had sold goods to B, B was supposed to pay money to A. That is why A drew a bill of exchange in yesterday's cases. Here between teacher and student, there was no any exchange of goods. As two friends, we are drawing bills of exchange. Why? So that we can use that bill to facilitate financing through discounting of the bill of exchange. These bills are called as accommodation bill. In my example, the value of the bill was 1 lakh rupees. The banker got it discounted for 10,000 rupees and I received 90,000 from the banker. On the maturity date, I will give 1 lakh to student. Student will go and repay 1 lakh to the bank. Dhanush sir got a loan of 90,000. The interest on that loan was 10,000. I did not have to have any asset as a security for getting this loan. This is case A. Now let me come down to case B. So what student is saying, sir, I'm ready to sign the bill. I'm ready to sign that paper. But do one thing, in that paper, instead of writing 1 lakh, you write 2 lakh rupees. What will happen in this case? The discount will be 20,000. How much money will I receive from the banker? I'll receive 1,80,000 from the banker. On the maturity date, why student is asking to write 2 lakh instead of 1 lakh? He's saying, sir, whatever 1,80,000 you get, you take 90,000. I will also take 90,000. Both of us got a loan. Now on the maturity date, who will repay how much money? Will Dhanush sir go and repay 2 lakh? No. Will student go and repay 2 lakh? No. That amount of 2 lakh has been shared by both the parties, teacher and student. How much will they go repay? 90. No sir, 90,000 is after the discount. How much was the discount? 20,000. This 20,000 discount also will be shared by both the parties. Both the parties in which ratio? The amount is in the ratio of 1:1. Your discount also will be shared in the ratio of 1:1. 10,000 discount for Dhanush, 10,000 discount for student. What will be the repayment? On the maturity date, repayment will be 1 lakh by each party. Let me come down to the third case. Now in the third case, the student is saying, sir, instead of writing 1 lakh on the bill, please write over there 5 lakh. If I keep a similar rate of discount, your discount will be 50,000. We will receive 4,50,000 from the banker. If Dhanush sir wanted only 90,000, then why student told to write 5 lakh? Student is saying, I will use a loan of 3,60,000. How we got 3,60,000? 4,50,000 was the total amount. 90,000 is taken by Dhanush sir. Balance 3,60,000 will be used by student. Now think and tell me, on the maturity date between Dhanush and student, who will repay how much? The ratio of this loan, if you observe, it is 1:4. So your discount also should be shared in the ratio of 1:4. Your discount for Dhanush will be 10,000 and the discount of the student will be 40,000. On the maturity date, Dhanush will repay how much? 10,000 discount plus 90,000 amount received, 1 lakh. Student will repay how much? 40,000 discount plus 3,60,000 value received, 4 lakh. What point we are noting is that an accommodation bill is a bill drawn without any exchange of goods between two parties to facilitate financing through discounting of the bill of exchange. Points to be noted, the amount of the bill can be used either by one party, case A, or by both the parties. If the amount is used by one party, entire discount will be borne by Dhanush. But if the amount is borne by two parties, your discount should be shared in the respective ratio. Amount ratio 1:1, discount ratio also 1:1. Amount ratio 1:4, discount ratio also 1:4. If you're sharing the amount between two parties, discount also should be shared. This is called as accommodation bill. Bill drawn without exchange of goods. If it is shared by both the parties, discount also should be shared by both the parties. Let's look at a question relating to accommodation bill from your ICI material itself. I come down to question number 10, illustration 10 of the ICI material. It's on page number 6.24. Let's read the question if it is matching to what story we have discussed. X draws on Y a bill of exchange for 30,000 on 1st January 2022 for 3 months. Y accepts the bill and sends it to X. X draws a bill, Y accepts the bill and gives it back to X, who gets it discounted for 28,800. X went to the bank, got the bill discounted. He got some money from the bank. X immediately remits 9,600 to Y. How much money we had got? 28,800 was got. In that, how much we gave to Y? 9,600. So how much is remaining for X? 19,200 is remaining for X. Now, if you see, they are both sharing the amount in which ratio? The ratio over here is 2:1. Let's continue reading. So on the maturity date, what will happen? That original amount of 30,000, who will repay how much? 20,000, 10,000. 2:1 ratio. X will repay 20, Y will repay 10. That's the story of the first bill. Let's continue reading further in the story. What they are saying. On the due date, X is unable to remit the amount due. How much was the amount due? 20,000. X amount was 20,000. X is unable to remit the amount due, and he accepts a bill of 42,000 for 3 months. He's unable to pay the money. Y draws a bill. X accepts a bill of 42,000, which is discounted by Y for 40,110. 42,000 is the value of the bill. They discounted it for 40,110. 1890 will be your discount of the second bill. Out of that, Y sends 6,740 to X. The second bill also, they went and discounted the bill. They got some money. That money also is being shared between both the parties, X and Y. Before the maturity of the bill, X becomes bankrupt. No, X is not. First of all, he didn't pay money of the first bill. Second bill also, he's becoming bankrupt. His estate has paid 50 paisa in a rupee. 50% has been paid. Give journal entries in the books of X and Y. Can we go ahead to record journal entries? Yes, sir. I've done a few calculations on the board which will help us to fill the journal entries. Let us slowly record one by one. I want you to look at the transactions which I've divided into different colors. Let's start with the first one. The first one in yellow color is saying X draws a bill of exchange on Y. Y accepts the bill of exchange. What journal entries will I pass? I will go ahead to say in the books of X and in the books of Y. They're asking us journal entries in books of both the parties. In the exam, very rare. Mostly they ask you any one. Sometimes they ask you both the parties as well. Now they've asked us in the books of both the parties. What entry will I record? I go back to see X draws a bill, Y accepts the bill. In the books of X, bill receivable account debit to Y. In the books of Y, it is bill payable. So you will say X account debit to bill payable. What is the value of the bill? 30,000. Okay. Next, let's continue ahead. What the next part of the question is saying. The next part of the question says X discounts this bill for 28,800. X draws a bill, Y accepts the bill. X gets the bill discounted for 28,200. What will be your discount? 30,000 minus 28,800. 1,200 is your discount. At this point of time, there will be no any entry in the books of Y. In the books of X, what entry should I pass? Bank account debit, discount allowed account debit to bill receivable account. What was the value of the bill receivable? Value of the bill receivable was 30,000. Your amount received in your bank is 28,800. So your discount automatically is 1200. Let's continue reading. What's the next paragraph saying? Who got it discounted for 28,800? Blue paragraph. X immediately remits 9,600 to Y. Who has shared amount with whom? X has given money to Y. X makes a payment to Y. Think and tell me what would be the journal entry in the books of X. Can I say Y to bank? Yes, sir. In the books of Y, what would be the entry? Can I say bank to X? Yes, sir. How much money is transferred? 9,600. But if you remember, I told you not just the amount will be transferred, along with the amount, they also need to transfer the discount. Agree, yes or no? Yes, sir. What was the total discount? The discount allowed was 1,200. So what will I do? I need to transfer it to Y. In the books of X, discount allowed expense going down will be credited. In the books of Y, discount allowed expense going up will be debited. Whatever total discount 1,200 I had recorded in the books of X, now I'm transferring it to Y. In the books of X, expense goes down. In the books of Y, expense goes up. How much, sir? 1,200 was the total amount into 9,600 divided by 28,800 or into 1 by 3. The ratio is 2:1. So 2 by 3 for X and 1 by 3 for Y. Divide and tell me 1,200 into 9,600 divided by 28800. 400, which is nothing but 1 by 3 of the amount has been transferred. 400 is the discount, 9,600 is the cash. What's the original amount? 10,000. What's the 10,000? 30,000 into 1 by 3. 30,000 is the total value. 1 by 3, 10,000 for Y, and remaining 20,000 remained with X. So this is 400, 9,600 and 10,000. Now logically think and tell me, on maturity date, who should pay how much money to whom? X should pay 20,000 to the banker and Y should pay 10,000 to the banker. X will pay 20,000 to Y. Y will go and pay 30,000 to the bank. Okay. Let's continue further reading. Pink paragraph. On the maturity date, on the due date, X is unable to remit the amount due. X is not able to pay the money. Who will pay the money to the banker? Y will pay the money to the banker. On the maturity date, there is no entry in the books of X. Y went and paid the money to the banker. What will we record? Bill payable account debit to bank. How much will Y pay? 30,000, 30,000. Please remember, Y was supposed to pay only 10, but Y went and paid 30,000. Why? 20,000 paid on behalf of X. X is unable to pay the money, Y has to pay. See, this was an arrangement between two friends. If one friend is not able to pay, the other friend has to pay the money to the banker. Banker will not take any loss in this case. Teacher and student made an arrangement. Teacher does not pay. Student has to go and pay money to banker. Banker is not going to pay the loss. Student does not pay. Teacher has to go pay money to the banker. It's an arrangement between two friends. One of the two friends has to pay money to the bank. So we keep in mind here, on behalf of X, Y has paid 20,000 to the banker. Okay. Let's read further part of the story. What's the next part of the story saying? X is unable to remit the amount due. He accepts a bill of 42,000 for 3 months. Who draws the bill? Y draws the bill and it is accepted by X. In the books of Y, I will record bill receivable to X, and in the books of X, I will record Y to bills payable. Can you check and tell me what is the value of this new bill drawn? Y draws a bill, X accepts the bill. It is equal to 42,000. What happens to this new bill? If I read further, the next line of the question says, green color paragraph, which is discounted by Y for 40,110. There is no entry here in the books of X. Y got the bill discounted with the banker. What would be the entry? Bank account debit, discount allowed account debit to bill receivable account. The value of the bill was 42,000. Amount received in the bank is how much? 40,110. The balance will represent discount, which is 18,090 rupees. 18,090 is discount. Discount for whom? That is the total discount for both the parties. Now let us read the story further. What is the next part of the story saying? If I go back to the question, the next part of the story says, Y sends 6,740 to X. So now beta, we are continuing the story over there. Yeah, we're continuing the story over there. Y is giving money to X. If Y is giving money to X, what would be the journal entry? In the books of X, I'm going to say bank account debit, discount allowed account debit to Y. And in the books of Y, what will you say? X account debit to bank to discount allowed. Simple. Receipt in the books of X, bank to Y. Payment in the books of Y, X to bank. Along with that, books of X, discount allowed expense going up. Books of Y, discount allowed expense going down. How much is the cash amount over there? They've given you 6740, which I had marked in purple color on the screen. 6740 is the cash component. What is the discount component? You need to calculate the discount component. How are we going to calculate, sir? I need to check what is the ratio between the two parties. Please do not assume the old ratio. The value of the first bill was 2:1. Please do not assume that the value of the second bill will also be 2:1 itself. At this point of time, I need to calculate the ratio. How will I calculate, sir? Let me see. Let me remind you what we did in the first bill of exchange. If I just check in the first bill of exchange, I saw the value of the bill was 30,000. Your discount involved was 1,200. 28,800 was the amount received. So instead of discount, I can say amount received is 28,800. Therefore, you got to know that your total discount is 1,200. The question itself over there told you the amount that is being shared between the two parties. What they did, sir? The total amount was shared between two parties. It was shared in which ratio? The amount received was shared as 9,600 and 19,200, which we get as ratio 2:1. This ratio came as 2:1. So your discount also will be shared in the ratio of 2:1, 800 and 400. That's the first bill. Same calculation, let me now do for the second bill. What is the value of the bill? 42,000. What is the amount received from the banker? I think it was 40,110. 40,110 is the amount received from the banker. What is your total discount? Total discount will be equal to 42,000 minus 40,110, 1,890. Now we need to understand what is the split between 1,890 between X and Y. For that, what they have given us, X will pay money to Y. How much will X pay money to Y? 6,740 will be paid. So can I take the ratio as 6,740 and balance? No, sir. Why no, sir? You need to remember 6,740 amount is the value of the new bill. Old bill amount also was pending. X did not pay the money of the old bill. How much was the value of the old bill? 20,000. Now the total loan of X will be 26,740. 6,740 amount taken from the new bill, 20,000 amount due on the old bill. Total loan is 27,640. What will be the balance for Y? Balance for Y will be 40,110 minus 26,470. 40,110 minus 26,470. 740, 470. I go back to question 740 it is. Okay. 26,740. You get 13,370. Now, what is the ratio between these two persons? 26,740, 13,370. Coincidentally, the ratio here again has come as 2:1. But it need not be always 2:1. So what will happen with this 1890? 1890 also will be shared between x and y. How much for x? 1890 into 2 by 3. Follow. 1890 into 2 by 3 is equal to 1260. 1260 is the discount of x, and how much for y? 1890 into 1 by 3, which will come down to 630. So now when we are sharing the amount, I will not just share 6,740 in cash, I will also share 1260 as discount. 1260 in the books of X, discount allowed, expense going up. 1260 in the books of Y, credit, discount allowed, expense going down. I'm sorry, I've written asset on the board. It's not asset going up down, it is expense going up for X and expense going down for Y. What will be the total value? 1260 plus 6740. Total value will be 8,000. Okay. Now let us go ahead to check the next part. What is the next part, sir? So now I want you to observe one more point over here. What was the value of the old bill? The value of the old bill for X was 20,000. What is the value of the new bill or second bill? 8,000. Total loan of X is 28,000 in this case. I hope you understand the loan repayment will be inclusive of discount amount. See, when originally Dhanush sir took a loan of 1 lakh or drew a bill of 1 lakh, he got 90,000 from the bank. How much will he repay? 1 lakh will be repaid to the banker. Here also, 20,000 value of the first bill, 8,000 value of the second bill, 28,000 X should repay to the banker. Let's read further in the question what is happening. Before the maturity of the bill, X becomes bankrupt. Before the maturity of the bill, X becomes bankrupt. His estate paying 50 paisa in the rupee. So now if you observe, X was supposed to pay money to the banker. X did not pay money to the banker. Who will pay money to banker? Y should pay money to the banker. What will be the journal entry here in the books of X and Y? In the books of Y, he paid money to banker on behalf of X. X account debit to X account debit to bank account. X account debit to bank account. How much money will be paid to the banker? 42,000 on behalf of both of them. He would have gone and given money to X. X would have gone and given money to the banker. In the books of X, what will I record at this point of time? Settlement of the bill payable account debit to Y, 42,000, 42,000. Through this entry, what has happened is that X was unable to pay the money, Y has paid money to the banker. Okay, let us see further. After this, we are able to collect some money from estate of X. How much money we are supposed to collect? We are able to collect 50 paisa is being able to be recovered. Now, when we are recovering 50 paisa, what am I going to record? Who will pay 50 paisa to whom, or who will pay 50% to whom? X will pay to Y. When X is paying to Y, in the books of X, everybody, what will be your journal entry? My logical journal entry here should have been Y account debit to cash or bank. In the books of Y, it's a receipt. Bank account debit to X. But along with that, are we receiving full amount? No, sir. What's the special point over here? In the books of Y, bad debt account will be debited, and in the books of X, deficiency account will be credited. How much is the deficiency, sir? Total amount was 28,000. How 28,000? Old bill 20,000, new bill 8,000. 28,000 was a total. Into 50% recovered and 50% going to be bad debt or deficiency. So I'll go ahead to say Y account 28,000, to bank account 14,000, to deficiency 14,000. In the books of Y, bad debt is 14,000, bank account is 14,000, and X will be 28. Simple point to be kept in mind. This completes our question for accommodation bill. But simple point to be kept in mind, accommodation bills are drawn when when there is no any exchange of goods between two parties, when they only want to help financing of the loan through discounting of the bill of exchange. It's quite simple. When is it going to be simple? Divide the question into smaller transactions. For each transaction, go and record a journal entry. When you're recording journal entry for bill of exchange chapter, only 4 points to be kept in mind: asset, liability, income, expense. For whom is it asset? For whom is it liability? For whom income? For whom expense? AE goes up debit, LIC goes up credit. AE asset expense, LIC liability income capital. So make sure to practice accommodation bill questions. Nowadays in the exam, they're asking a lot of these type of questions in the exam. Comment accommodation bill in the chat box so that I get to know you're able to follow whatever is happening in these sessions. Wishing you all the best for your preparation and for the exams. Yashasvi Bhava. See you in the next one.